with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way you're notified whenever we release new videos. We do release videos every night throughout the week and once on the weekend. Make sure you follow us on X at Bullish Chips, where you can get real-time updates as to our entries and exits for not only scalps and day trades, but mid and long-term trades as well. We also provide further commentary throughout the day about the market activity, price action, and just other information that might help in your day's trade. Make sure that if you like the video, you hit the like button. That really helps us grow, helps us to spread the news about SOXL, which we believe is one of the best ways to make money, either, for if you're looking for low cost entry point for, high gains, or if you're just looking for steady income. So make sure you hit the like button if you like today's video, and let's get into the charts. That's what we're here for. We'll first go over today's price action, look at a little bit of past price action as well, and then we'll get into our notes, setting our triggers and targets for tomorrow's activities. So looking at the chart, this is the day chart. We did push down initially at the open. Further downside action, like we talked about yesterday, could be expected. We were talking about looking for a three failed two down, which is exactly what we got on the day. So kind of lines up how we wanted it to, not exactly how we expected it to, because we're not in the prediction business, but it lined up how we wanted it to. We used our triggers and targets today to initially protect our longer term call swings with some puts that ended up getting stopped out at even, so no harm, no foul there. Nothing won, nothing lost, which is fine. As long as if price was going down, we would have made money. But since price is going back up, our longer term swings are going back in the direction that they're supposed to go. So it's kind of a win-win situation there. But we did also capitalize a little bit to the upside as well after the bounce. So after we got a little bit of confirmation within the day's movement, we were able to enter and exit towards the end of the day, just before the little drop that we had there before close. So once again, running into this monthly downtrend line, which is this dash green line. If you're if you're new to the channel, make sure you check out the videos in the description of this video for how we set up our charts. What our color coding means for different time frames, and just a breakdown of how we set up our triggers and targets. But let's get back to the charts here. So we got this monthly downtrend line, this green dash line that we've been fighting against, in combination with this weekly broadening formation, as well as the year flip right here. So we've got the year flip at 28.13. That's where the year would flip green. If we take a look at the upper left-hand part of the chart, we've got our time frame continuity indicators. Today was green. Obviously, we're still red on the week. The month is green, the quarter is red, and the year is red as well. So we've got those marked out as well. We can see that the week's opening print was right here, so that would flip us back green if we get price action above 24.59. 24.38 is the quarter flip, so we go back green if we get above the 24.38 level. And today, although we dipped below it, we were able to get back above the 23.57 level, which is the month flip, which is why the month is green and the day is green, but everything else is red. So still need to be cautious. We've got resistance ahead. Still, taking out, if we ignore the broadening formation, the downtrend line, opening prints for the month, quarter, and week, we can just see that there's a clear defined range that we've been in for the last 4 weeks now, going on 5, and we're really just coming back up to the bottom of that range. So we could be just running into resistance, just looking at the range of price action that we've had. If we do poke back in, we got to have kind of tempered mentality, because we could just go back to the top of the range to come back down once again. So we want to just play everything by ear, stick to our rules, which, if as long as we follow those, then we'll come out profitable in the end. So looking at the day once again, looking for the 3, 2 down, 2 up. It gives us a very clear entry. Any price action above today's high, we want to enter in calls. Again, we've got to fight through this resistance here, but the ultimate magnitude for the 3, 2 down, 2 up, 3-bar flip is the high of this 3, which is 25.68. So we're at 24, so that's $1.68 to work with. When it comes to SOXL, that's a good percentage move. If we look up here, at just a 50-cent move, it was 2% on the underlying ETF. So we could get almost 3 times that. So that would be around a 6 to 7% move. Excuse me. And that would be some real good profit to get on a day trade perspective. From the longer swing trade perspective, that puts us back up at least into the bottom of the range, targeting the top of the range again. So if we do get to back to the top of the range, we should be pretty handily broke out of this monthly downtrend. But again, we'll need to break through this year flip, and then pressure this weekly broadening formation before we can say we're truly out of the clear, right? We want to try and at least make this higher high on the day chart, which is 32.64. So that's our first real target with the swings, and we just want to continue to play, like I said, play our rules. The top of the gap continues to be a bounce point. We talked about it all throughout these 3 weeks, that even if we do break through the bottom of the range, look for the top of the gap to be a bounce point before we actually would go fill the gap if we do fill the gap. So we got exactly what we were talking about. Did get a lower high on the day here, right? But it looks like if we go 2 up tomorrow, we've got a higher low. So really just consolidation. When you get a lower high, higher low, price action is consolidating here along this week quarter flip, down monthly downtrend line. So we do want to break above this, the high of yesterday, to create the lower high, higher high situation and the start of a new uptrend. That way, getting to this year flip looks a lot more like something that could be accomplished. Again, we need to consider seasonality. August, September, October, not the best performing months for tech. Again, since 2020, August has been less of a sore spot for tech than it was in the past. So, we're still getting decent action here in August, which kind of plays along with the seasonality. But we are kind of looking to go further down in the near future. Not predicting that, but just being ready for it, because we are in a daily downtrend technically. If we bring out the daily broadening formations, right? So we had the initial broadening formation when we first peaked out. It tightened up, which gave us these tighter daily broadening formations. We broke through that, came down, touched the wider one, got our bounce. So do we come back, touch it again, filling this gap? Do we break through this daily downtrend line, which coincides with the monthly downtrend line? Let's get this out of here. That weekly uptrend line is done with. So let's just take a look once at the week perspective, because we are still inside after a 3-2 down. So can we possibly get the 3-bar reversal strat of a 3-2 down, 2 up? Well, it's still within the realm of possibility because we haven't gone 2 down yet. But we're pretty close, and so we need to just keep that in mind. Initial target for the downside would be the low of this 3 on swings, so 2028. Again, we're at 24, not too far of a move for SOXL. All right, so just look real quick, more granularly at the. Let's see. Let's look at the perspective of our 4-hour triggers and targets. Price action on a more granular scale here this morning. So we did get the open, which wasn't quite a gap down. It was a gap down from where we closed, but not on the day. So we got the push down, initial pushback up, but we did get the lower high. So once we got the lower high on the 15, we did enter some puts. I think we entered some more on, we added 2 on like the 5-minute. There was a lower high in here, but we did end up stopping out once we went 2 up on this candle. right here. So we're in profit from the ones we entered earlier, but we lost a little bit from the ones that we were in here. So we ended up basically stopping out. Let's see, on the 15, I'd have to look at I haven't logged my trades yet, so I'd have to go look at the X feed to see exactly when we stopped out. It was probably right here. So either way, stopped out early in the morning, but we're able to get in. I believe it was, yeah, we had to play on the 5 minute more than we wanted to. So we got the higher high here, right? So there was the lower high here. Even though we had a lower low, we did get the higher high with the higher low here. So once we breached the top of this three, we entered some calls. We just hung in there basically until towards the end of the day we exited. We did leave a runner. Again, if you follow us on X, you can follow our trades. But we did leave a runner for overnight, which initially was looking pretty kind of bad. It looks like Thinkorswim hasn't updated yet. There was the Trump talking about tariffs for semiconductors, except for I think it was Apple and Nvidia. But it looks that like things have bounced in after hours. SOXL is up 1.79% now, so things are looking positive for the 3-2 down 2 up on the day. If we look at it from a 4-hour perspective, because we got to trigger that first before we can trigger the day, we're still in good standing because we're in the middle of a 1-2 down 2 up, right? So excuse me, with a 1-2 down 2 up, the target is the high of the candle to the left of the one. So that would be not today's high, but yesterday's high, which we haven't moved these 4-hour markers yet, which is this 25.68. So we would continue this 1-2 down 2 up if we open up and push up tomorrow, which could then lead to the 3-2 down 2 up on the day, and then we just kind of take our extended targets from there. Because if we bring the weekly fib up, so the low of last week is down here. The 50% of last week is up here. So, expect some more resistance when we're getting up to the top of this. We've got last quarter's high right here at this 25.84, this yellow line. Last month's 50% at this 26.04. So we'll be coming into some resistance and possibly expect, if we do breach the top of the yesterday's high, let's see, if we do breach the top of this, then we're creating a higher high. But if we don't, we're creating a lower high, which again would indicate at least consolidation. And if we break for the lower low down here, we're probably going to fill that gap and then see about making the lower low on the week. But let's go ahead and get into what the show is really about, setting our triggers and targets for the following day. So we've got here, let's go ahead and move our previous high a day from yesterday to today, because tomorrow that will be the previous high a day. We'll take the 4-hour trigger to the upside, move it to the high of the second 4-hour of today, the 4-hour trigger to the downside, and move it to the low of the second 4-hour candle of today. And then we take the previous low a day and move it to today's low, right? That way we've got those all marked out. And actually, let's just look at real quick, just because, if people aren't familiar with this method, we'll just kind of show how accurate it can be when it comes to the, oh man, come on. There we go. When it comes to the intraday trading, right? So we can see that today the line here, I guess today isn't the greatest example, but there was a big fight here over the month flip, the overnight low, and the previous low a day. All of those coincided together, so you can see how it was a rejection point here. Yeah, it wicked above, but ultimately it closed below it. It came back up, found more resistance here. So you could have taken, if you wanted to, if you were down on like the 1 minute chart and got, because that's what you would have to get down to get in down here, and you got, you know, a higher low here. Your first target would have been overnight low, previous low a day, because that's the first major inflection point. Even if the month flip wasn't here, that first major inflection point would be the previous low a day. After you've reached above there, your second target would be the 4 hour trigger to the downside, right? Because that's the next major point of inflection. Now we didn't quite reach it today. We could reach it tomorrow, but that you can see how price was moving up to that. So again, today wasn't the greatest example, but it does give you an idea of how you could also, if you didn't get in down here, you waited for your higher low right here at the previous low a day, previous high day, and got in on that. You could have also waited and got in on the 5 minute right here in this candle with the higher low. If you were waiting, actually you would have had to wait even a little longer because opening print was right here. Yeah, if you were waiting for opening print to get in on calls, then you know you would have waited till here for this higher low and got in as soon as we broke higher. So you would have had less time to really get that, but it would have been a excuse me, a high confidence trade, and you know you could have, depending on how you loaded up on contracts, you could have got quite a few, got down on the 1 minute, and you know exited on any lower high, or held to swing overnight, right? So it just all depends on how you want to trade. If we look at the internals for QQQ, we put that up against SOXL, so we can, again, chips. There's more in QQQ than semiconductors, but semiconductors are a heavyweight in the Qs. So if we look vol QD, especially when I was talking about the higher lows above previous low a day, that's when we were getting this higher low and better price action above the zero line. So we were having stronger volume inflows of money, right? Your tick, except for in the morning, it was really above the zero line most of the day. So more stocks were ticking up than down, which also is shown in the breadth here, right? We had the initial push down, everybody kind of sold off, but then as breadth grew, price continued to move up, right? So everybody was getting money, volume was money was flowing in, everybody was getting the money, and all the ticks are showing that, right? And then in the long run, you see price action shows that as well. So again, we didn't really look at internals at the beginning of the day because of how different QQQ and SOXL's price action was, right? QQQ was pushing while SOXL was pulling down. But once things got to the zero line, especially with the vol QD, and we got back into the previous day's price action, then we kind of looked over, and it was really playing out more, one-to-one with SOXL. So once we saw that, we could put a little bit more faith in the internals and stay in those calls that we were already in for the intraday trades. Continue to feel good about the mid and longer term swings that we're in, continuing to gain money back. So that's how we use the internals today. But let's go ahead and get it, like I said before, let's get into the notes. I won't delay anymore because I know that's what a lot of people are waiting for. So we'll get rid of the opening print and just move these levels once again, just so that we can have everything set up to make some good notes. All right, so activate the trigger to the upside for the 4 hour. Let's get that on there, right? And then activate the trigger to the downside on the 4 hour and move it to the low of the second 4 hour of today. And we'll get the previous low a day and move it to today's low. All right, so we've got those set. Okay, we'll worry about overnight high and overnight low in the morning, as well as opening print. We'll mark those out once price actually opens, because that's when we'll know when the final overnight high is and the final overnight low is, and opening print can't be plotted till opening print. So let's bring up our notes, and we'll duplicate yesterday's notes, but make this Thursday, and that will be August 7th. There will be 99 trading days in the rest of the year, starting tomorrow. So first under 3-digit. All right, $23.99 was the close price, right? and we can see that we have this marked out. So if we can glance at it easily, the week turns green at 24.59, the month turns red at 23.57, the quarter turns green at, oops, why is that red? Sorry about that. Let's get these right. So the quarter turns green at 24.38, and the year turns green at 28.13, right? So we've got the week's expected move as well, which was $3. Market makers expected move, which would give us a range of 27.08 to 21.08. We're within that range. Again, we can go above and below that range with price action, but this is just what the market makers expect for the week. We have our gaps above plotted out, and we have our gaps below plotted out. So let's go ahead and put our markers out here for the 4-hour time frame, or the triggers and targets to the downside. Let's first look at what the strat would be. That would be a 2 up and then a 2 down, triggering with price action going below the low of the second 4-hour candle of today, which is 23.62. So we'll put that as 23.62 as the trigger. The magnitude is the low of this candle, which is 22.95. And I apologize if I didn't say it at the beginning of the video. This is, what we're talking about here with the 1s, 2s, and strat reversals. This all applies to the strat, which was invented by Rob Smith, rest in peace. I have linked to his YouTube page in the description of this video. Make sure you check it out if you're not familiar with Rob. There's also plenty of information on the internet about Rob, so go ahead and check him out. And if you're don't know what the strat is, I would highly suggest learning it, because whether you use it fully or just kind of apply it to other your method and kind of help aid in your chart reading, it is one of the easiest ways to read price action. Price can only be a 1, a 2, or a 3. So based off of those, there's certain reversals that can occur or that are more likely to occur, and it makes trading really easy, especially with precision entries and exits, right? So again, we'll have the 2 up, 2 down. We mark the trigger, we mark the magnitude. We can have an extended target here of this top of the gap once again, which is 22.57, and then the close of the gap, which is 21.98. All right, 23.58. I don't think, yeah, 23.58. No, that's 22.57. That was the 23.58. So 22.57 is the next lowest low, which would, if we break below that, we're handily in the daily downtrend. The 4-hour downtrend has kind of broke. It looks like more like it's creating a broadening formation, but it's had this higher low, and we just need to continue on to create a higher high for the trend to truly break. But those are that's the magnitude, the extended target 1 and extended target 2 for the 4-hour time frame at least for the downside. So let's continue with the upside. Tomorrow, if we get price action above the high of the second 4-hour candle of today, which is 24.12. Oops, 24.12. And actually, I forgot to mark this a 2 up, 2 down. But this would be a 1, 2 down combo 2 up. So it's just an the 1, 2 down, 2 up reversal is just extending to the next day. So it's a combo 2. This 2 up and then the next 2 up all are just combined to make a larger 2 up to this candle, right? So it'll be a red 1, 2 down, combo 2 up. We've got our trigger of this high. The magnitude for a 1, 2 down, 2 up, again, is the high of the candle to the left of the 1, so that would make it this 3. The high here is 25.68. All right, so that magnitude is already there, and we already have our extended targets from yesterday. All right, so just because it's just extending the 1, 2 up, 2 down from today, so we can leave those out there. So what we want to do then is go ahead and move our triggers and targets for the day, right? So let's go to the day chart, and we can see that if we did go to the downside, it would be a combo 2 up, combo 2 down, if you look at it like that, right? So this 2 up combined with, it initially went 2 up, but then it went 2 down combined with this 2 down. So combo 2 up, combo 2 down. The trigger would be the low of today's low. I'm sorry, today's low would be the trigger. So 22.95. 22.95, and we would have a magnitude here of 22.57. So let's put a magnitude in there, 22.57. So we can have an extended target, right, of 21.98, which is the gap close, right? And let's just bring out some fibs real quick. Oops, that's the wrong one. Nothing on that one. Let me try and bring out a old chart. Let's bring out an old chart. This should have something on it. No, nothing. So nothing really major that would stick out. I guess the lower low on the day would be the extended target. That's kind of an extended move. I'm surprised I don't have some other. Oh gosh, that is messy. This is probably for some scalps that I had in the past. But even then, so we can look at this 21.14, 20.8 as an extended target. 21.14, 21.08. I'm sorry, was that 20.8? Yeah, 20.8. All right, so let's go back. Let's get into our real chart here. So again, if we get movement to the upside tomorrow that breaks above today's high, that gives us a 3, 2 down, 2 up reversal. Trigger being the high of today, which is 24.12. All right, 24.12. And this is a 3, 2 down, 2 up, and this was a combo 2 up, combo 2 down. So this would give us, again, a trigger of 24.12, and it would give us a magnitude of the 3, 2 down. The magnitude is the high of the 3 for the 2 up. So that high is 25.68. 25.68. And then we've got our 26.04 and 26.74 as extended targets, right? Again, we are still a 1 on the week, so nothing is triggered. The 3, 2 down, 2 down has not triggered. We've not gone below 22.57. And the 3, 2 down, 2 up on the week has not triggered. We've not gone above 28.16. So we want to just keep in mind that on the week we're still inside. And the rule of thumb from a strat perspective, especially from if we're looking at the week perspective, we're inside. That's more of a swing, midterm swing perspective. You don't make a move on a 1. So you don't want to quite bail from, especially if you got some time on your contract. If you got contracts that are expiring this week, you don't have this ability to make this choice. But if you've got even August 15th, you've still got a little bit of time to make the decision on. But especially for September, October, November, January 26 calls, things of that nature, you've got time to wait for the 1 to become either a 2 up or a 2 down on the week before you make your decision on whether you want to sell or stay in your contract, right? We're at 23.99, so again, we're very close to going back in force with the 2 up, 2 down on the month. So at 23.58, we go back in force to a 2 up, 2 down, the magnitude being 16.04, right? So we haven't seen that yet. Let's just bring up the chart. I'll go to the month. Oops, that's the quarter. Let's bring up the month, all right? So we blow this up a little bit. We can see that it has triggered the 2 up, 2 down, right? When you get a 2 up, 2 down, the magnitude is the low of the 2 to the left of the preceding 2. So that would be this low, which is the 16.04. From a month perspective, we've got, I guess you could call it thin structure, right? There's really no this candle didn't come down and just clean up any of the direct push up. We were just straight pushed up. So there's some thin structure down here to be aware of. We've got the gaps that we've got to be aware of too, right? So if we fill this gap, could this next gap be a magnet, right? Even if we don't fill it, could it entice people to get inputs thinking this could be filled, which would push action to the downside or be selling selling shares, which could push price to the downside. And if it does, do we get some catch off of this weekly uptrend line? Let's go back in here on the week, and we can see at the very bottom of this move we had the low and the higher low, which creates this uptrend line. We've obviously gone below this uptrend line that we would have right here. This uptrend line has been broken, right? So you know, do we get some action off of here, play off of here before we get to the gap? Do we wick through this uptrend line, bounce off the top of the gap? Do we actually fill the gap and then still respect this uptrend line? Just get a wick down here and then the body push back up. That's what we've got to see in the coming days and possibly weeks. But for right now, we know what's on the board. We know that we've got our possible 3-2 down, 2 up tomorrow. Let's go down here. Yeah, the 3-2 down, 2 up, targeting the high of yesterday, and then possibly trying to get some more push up. So I hope everybody had a good day trading today. Even if you didn't make a lot of money, I hope you didn't lose any money. Or if you did, it was a small loss. Small losses are still acceptable, right? Especially if we're following our rules. We're sticking to the script. You're gonna have small losses here and there, but we have bigger wins and we have more wins, and so in the long run we end up profiting. I hope everybody enjoyed the video today. If you did, give it a thumbs up. Like I said, it helps our channel grow. Just want to get the word out about SOXL. Again, I'm not offering any financial advice. I'm not a financial advisor, but this is just my view of how price action is moving, and trying to give people a method of operating with a strategy that I've used for years now to maintain a profitable and successful run. And so I just want that for everyone out there as well. And if SOXL can be the vehicle for that to happen for a couple of people, I'd like to be able to introduce them to that. So a thumbs up goes a long way. Hit the subscribe button as well. Don't forget the notification bell so that you are notified when these videos drop. Like I said, I only release one on the weekend, so it's always good to have the notification set up for then. That way you know that when the video is dropped. I hope everybody has a good rest of their night. Finish up on the charts. Brush up on any other tickers that you are involved in or thinking about being involved in. Give yourself some good risk reward, and get some good rest. That way we can have a great trading day tomorrow. I think it's going to be a pretty good one. So again, hit the thumbs up, and have a great night. Catch you all tomorrow.